Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in.
Okay, happy Thursday everybody. General Secretary Xi Jinping attended the opening ceremony of the BRICS Business Forum in virtual format in Beijing on Wednesday, yesterday, delivering a keynote speech. Quote, "No surprises in the speech. Hits the expected notes of promising the Global Development Initiative and Global Security Initiative, criticizes the United States repeatedly, but not by name, discusses the Ukraine crisis, but not in a way that is critical of Russia or Putin." End quote. In his speech, Xi Jinping called for an alternative to Western-dominated global governance, which he says China can provide. The BRICS summit, standing for Brazil, Russia, India, China, South Africa, which officially began today, this is the BRICS summit, not to be confused with the BRICS Business Forum, which was on Wednesday, brings together Xi Jinping, Russian leader Vladimir Putin, as well as the leaders of India, South Africa, and Brazil. Analysts believe that India is expected to counter Beijing's attempt to use the summit to highlight Chinese efforts to build an alternative to the US-led global order. Leaks from Indian officials suggest this too. One official speaking to Western media expressed that India will ensure any joint statement from the summit is neutral. Now we remember, of course, that this is not because of Indian love for the Americans, but Indian suspicion and competition with the Chinese. Last month, People's Republic of China Foreign Minister Wang Yi, at an online meeting of his BRICS counterparts, proposed that the grouping should start to include more countries. Modi's government has also expressed opposition to such a move. General Secretary Xi Jinping is scheduled to host a virtual dialogue on Friday, tomorrow, that will include leaders from BRICS countries and some from other emerging markets. We will be following the event closely. Okay, this moves us on to the Chinese economy. And first up for the economy, a China Federation of Logistics and Purchasing survey published this week shows that almost 80% of China's logistics companies saw their profits decline in the first 5 months of this year, with the road freight volumes of more than 60% of respondents surveyed plunging by between 5 to 30% year-on-year during the same period. The report, which surveyed 210 logistics companies in the country, found that over a third of respondents blamed the drop on weak demand. One logistics firm executive speaking to Chinese domestic analysts expressed that red flags for the industry could be seen as early as 2021, well before Shanghai's lockdowns, when his company's cargo volume saw a year-on-year decrease of more than 20%. Quote, "The extent of the decline expanded to 30% in the first half of this year," the executive said, adding that even the annual 618 shopping festival this month failed to offset the losses his company racked up in the previous months. End quote. It's important that we keep our eyes on logistics data from industry groups like this, because this gives us a real clue into the health of the true or the real parts of the Chinese economy, especially relating to underlying demand. Over 90% of logistics companies surveyed complained about increasing operating costs due to lockdowns as well as fuel price hikes, with the average price of diesel up 50% year-on-year in mid-June. Hey team, if you appreciate what I'm trying to provide here with this channel and you would like to help keep it sustainable, Patreon is in the description below, or anyone who wants to give a one-off tip, Buy Me a Coffee link is in the description below too. If you're enjoying the video, don't forget to hit the like button, share, this sort of stuff is a huge help as well. Thank you so much everybody for the ongoing support. Next up, we should expect more stimulus for the automobile industry this year. The State Council, at its weekly executive meeting yesterday, promised to, quote, "further unleash the potential of automobile consumption," end quote, and that it will pass measures to increase car purchases by about 200 billion yuan this year. During the same meeting, China's cabinet also stressed, quote, "keeping grain production stable and increasing output as a key measure to keep prices stable and enhance China's ability to ensure food security." End quote. Food security is of increasing concern for Chinese leaders, something that we looked into specifically in yesterday's video. The next economic update touches on US-China relations. The internal debate within the Biden White House over whether to relax some of the Trump-era tariffs on China continues into this week. On Wednesday, yesterday, US Trade Representative Catherine Tai, in testimony before a US Senate Appropriations Subcommittee, said that she views tariffs on Chinese goods as, quote, a significant piece of leverage, end quote, and removing them was likely to have a limited effect on controlling short-term inflation, seemingly in pushback to some voices in the US administration who have called for dropping some tariffs to ease inflation in the world's #1 economy, and indicating that she is pushing for US President Joe Biden to maintain tariff leverage over China. Tai continued by expressing, quote, "We need to be keeping our eye on the ball on this bigger picture." End quote. US tariffs of up to 25% remain on approximately $370 billion of Chinese goods. Now, one final thing for the economy before we move on to the housing market specifically. This week, the so-called 26th meeting of the Central Commission for Deepening Overall Reform on Payments and Other Financial Activities on Platform Enterprises is strongly signaling that the highly disruptive and intense phase of the regulatory crackdown on the technology sector may well have come to an end, and that the regulatory environment will now be more stabilized and predictable. Of course, we will see. One sign to look for will be whether Jack Ma's Ant Group Co. will apply and receive a key financial license in the next month or so. If the People's Bank of China accepts Ant's application to become a financial holding company, a review process, which could take months, will begin. But this would be a positive sign for the wider technology and platform industry, which has been thrashed by regulators since 2020. Okay, now the housing market. Yesterday, Wednesday, ratings agency S&P Global downgraded state-backed Chinese developer Greenland Holdings Corp. To selective default after the property developer extended the maturity of its $500 million bonds by 1 year, expressing in a statement, quote, "We view the transaction as a distressed debt restructuring and tantamount to a default," end quote. Greenland still faces a significant amount of offshore debt maturities over the next 12 months, totaling about $2.4 billion. Analysts both in China and overseas have been quick to point out the significance of this development within the broader context of the months-long housing crisis. Shanghai-based Greenland is the first state-backed developer to extend a dollar bond payment and thus be in this form of default since the country's property sector plunged into crisis last year. This coming at a time, too, of increasing pessimism towards the sector. Despite regulatory easing, sales have not recovered, or indeed stabilized so far this year. As we saw in yesterday's video, some developers have been pushed to extremes, with one Henan firm offering to accept wheat and garlic as down payments for homes. This week we learned that among the 14 publicly traded real estate businesses that have disclosed annual sales goals, nearly 80% said they reached less than 30% of their targets by the end of May, according to a survey by the market research firm China Real Estate Information Corp., a report which we will explore in more detail tomorrow. Greenland is China's 7th largest property developer based on sales, and like many in the sector is highly leveraged. As a state-backed firm, though, the market had previously priced in less risk. Indeed, last year, Greenland received a bailout as authorities at the time sought to limit risks posed by the industry. But with this downgrade this week, now the market understands that even state-backed developers are not a safe bet. That is today's episode. Thank you so much, everybody, as always. I'll see you tomorrow.